So we're probably quite unique in that we actually have an investment thesis. So you'd be surprised how many people, especially with what's going on in the token market at the moment, their thesis is investing in tokens, which if you're looking at the pure math of it, isn't such a stupid idea. So if you invested in every ICO that's ever happened this year, even all the ones that failed, you would have made a multiple of 1,000. Totally indiscriminate investing, you would have made probably a greater return than in any other asset class. But I don't think that's sustainable. I don't think it will last very long. So we have a very clear thesis that we've developed over the last 4 years. That means we largely don't invest in the majority of these things, even if we know that just through the nature of the market, we could get a financial return. And so our thesis is something called convergence. So we invest where blockchain is combined with things like AI, IoT. So we invest with a lead investor in IOTA before they issued on the exchange. 3D printing, autonomous robotics. Because for us, blockchain-like technology, distributed ledgers, is kind of the commoditized layer. It should be free all to the point of free, and it should be open source. So that really is just the enabler. And when you look at it in combination with things like AI, so what does AI need? Well, it needs lots of data. And actually it needs an incentive to encourage people to share that data, be individuals, SMEs, large corporations. And so the ability to tokenize a ledger that, for example, will enable data marketplaces for people to buy and sell and leverage data for AI is going to be one of the most exciting innovations that is going to be coming out of the blockchain space. So we invest within convergence of these technologies, and that's most relevant for us in things like Industry 4.0, smart cities and mobility. And that's where we've cultivated a corporate network to help these things scale. So the most important thing when assessing the value of a network, a protocol, and therefore the token is the network adoption, and therefore the amount of people that are using that system. And in large part, the first kind of stakeholder group in this economy that you're trying to build are usually developers. So actually helping these protocols scale is helping them engage with developer communities around the world, both corporate development teams and kind of the kind of independent developers. This is the most important fundamental. And if you can achieve that, like IOTA have, like Ethereum have, then you kind of gain from that network effect. And what's most interesting is that those developers can have a stake in the system. So those developers are directly incentivized to build on top of the protocol and to make it a success. And so this creates really powerful network effects like we've never seen before. And I would argue it's going to be almost impossible for a closed proprietary equities-based business to compete with a tokenized open source protocol. So a lot of those previously proprietary businesses will either have to tokenize their offering or die, possibly even be acquired by somebody that raises a lot of money through a token.